Okay, cool. So yeah, when you're trading, I was explaining to people that you don't want to trade every day, right? I mean, you can if the trade is there, right? But what gets people caught up is thinking that they need to trade every day.
Yeah, that's what I've been doing, training every day.
Nah, I used to be the same way. Like I would wake
Mhm.
up at 8 a.m. and be at it. Actually, I was waking up at 3. As soon as the market opened, I'm like in there freaking buying penny stocks and stuff. And it was working and I grew my account, but then I realized the more I traded in bad times,
Okay.
like the more I had to learn that like, oh dang, like okay, you don't have to trade every day. So on that topic, let's actually take a look at something. Share screen. Uh, Let me open up this and Google Chrome. Chrome. Share. Okay, what in the world? I will allow open systems. Oh yeah, I just got a new computer, so I gotta allow Zoom access. Click to unlock. Okay. Okay. Zoom will not be able to record the contents of your screen until it is quit. What? Until it is quit. You can choose to quit Zoom now or do it on your own later. Okay, I'm gonna have to quit this and come back, I guess. I don't know. Hold on. Zoom, share. Okay, let me see if I can share the screen. 1 second. All right, click share. Okay, here we go. All right, make sure the recording is still in process. Okay, yeah, it is. Perfect. Okay, so wow, how do I get rid of these controls at the top? I can't touch these. Okay, there we go. All right, so let's take a look at the market, right? So this is why you should not be trading every day because the market goes through cycles, right? So let me make this smaller as well. Put this over here. And if there's some stuff going in the chat, just let me know because I can't see that information on my screen off the bat. So give me a heads up if there's any information in the chat.
Okay.
But so let's look at the SPY. All right, so the SPY is the S&P 500 ETF. All right, so if you're going to trade, you want to look at this, right? I mean, honestly, you want to respect this too. Like, I feel like the best times for you to come in and trade is when we're at these types of moments, right? So I mean, even looking at it right now, we just broke over a resistance right here, right? So this was obviously a resistance right here. We were getting rejected. We broke through it, came back under it, broke through, tried to hold this, boom, went over it, came back under it. And then we shot back right here and the day closed at 420. So right now we know that 420 is a resistance. Okay. So it broke over 420 and that's why it's just been going crazy right now. Because most of these stocks that are even in the S&P are overextended, but it doesn't matter because if the market's going to go up, these stocks will too, right? So 130 was the equivalent of Apple, like 130 for Apple is the equivalent of the S&P's 420, right? Like the S&P had to break over 420, Apple had to break over 130. You notice that once it broke over 130, wow, did the same thing as the S&P SPY, right? So we see the 420 right here. It broke over that and gave, let's look at them side to side. Let's see, Apple. Although I will say, if you look at like Apple with the QQQ, that would be more direct because it actually has a high leverage in Apple. Plus, it's the NASDAQ. So the NASDAQ is tech. So if you look at the QQQ, these are going to have the same trajectories. Obviously, this is going to be different. Like it's not going to have this spike in here because that was just Apple doing that. Like, right. So this ETF can't just move with Apple. It's going to move with Apple, Microsoft, Facebook, Google, just tech. Right. So if Apple had a great day, that's great. But this would have let you know that this wasn't going to stay for long. Right. So whenever Apple made this move, look how thin that is. Like none of this even existed, basically. because there's no bar here. There's just this little, we call this a doji, but I don't think I've ever seen something like this where it's just open, it opened and closed like really close to each other. Like notice these numbers right here. So when we look at this, it opened at 143 and closed at 142.92. So literally the stock in the day went nowhere other than it did have an extreme low and a high, right? But in the day, it literally, so if you want to break down this candle, if we opened here and closed here, that means that we literally opened, shot up, then shot down, and then we closed back. We recovered. So let's take a look at that day. What day is this? I think this is a great example to show you and dissect the candles. So 125. So on January, let's see, on the 25th of January. Dang, that's gonna be a little scroll. Let's do 4 hours. Okay, so January 125. Let's take a look at it. Let's see if we can dissect it just a little more. Scroll out. So here we go. Boom. So you can see. All right, so 125, basically it came in this day. It hit this high pretty early. Like I said, it mostly did that in the morning because most of the times in the morning, you're going to hit your highs because you have a higher volumes in the morning. Look at that. In the morning, we get a fresh jump of volume because people are trying to make up their minds, right? Or am I going to buy this? Am I going to sell it? We get the highest volume in the morning and usually at the end of the day. Not so much here because people were probably really indecisive. Yeah, nobody was trying to really jump in at Apple at 140. So you can see the low volume here, but for the most part, the end of the day and the beginning of the day have the highest points of volume. So in the middle of the day, you see these dips and it's not worth trading. But on the 25th, for example, like I said, it went up, hit its low, and then came back. So that's what that candle told us right here when you look at it on the January 25th. So when you look at, where is that? Right here. Oh, no. Oh, I'm way off. Wow. 125. So yeah, oh, now it's green. That's weird. But this candle had these highs and these lows because in the morning, like I said, it reached up and then it hit a low and then it bounced back. So that's all this bar and candle. That's why it's so important for you all to look at candles and dissect them because each one of these is telling me a unique story for the day. Like for January 6th, because there's so much weight down here, that lets me know that this wick right here gives me support, knowing that a lot of people were trying to fight for these prices. So if we opened here and closed here, that means that we opened, had a high, hit a low. We hit a low, right? So the low for the day was 126, but we closed at 160, saying that, hey, I'm supporting you here. I got a lot of weight down here. All right, so you can see what happened here as well. Anytime you get these long wicks at the top and these heavy bottoms, yeah, mute that. That's letting you know that we're trying to keep the price up here, but we also didn't allow it to go any lower, right? No, like when there's no wick at the bottom, that means that people weren't trying to pull the price any further. Like the low was the low. Right. So the close of the day was the low on a red candle that has no wick. Right. So definitely keep an eye on those types of things. But back to what we were talking about in terms of why these tech stocks are breaking out or why the market is breaking out in general, because you want to follow these indexes. OK, it's so crucial for you all to follow these indexes. Let's see. Oh, we got some more people. Hold on. How do I see everybody that's in here? Okay. Oh, we just got Sunday in. Okay, cool. And okay, cool. All right. So let's get this off the screen. So in terms of not trading every day, this is why we don't want to do that, right? Because if calls are your strategy, you don't want to get caught up on days like this, right? Where you have gaps down. Okay. So if you're wanting to trade, make sure you're trading in accordance with your index. right? So if I want to trade Apple and Microsoft, I'm going to come look at the QQQ and say that, okay, we're a bit overextended. Let me check out my indicators. All right. So Bollinger Bands, I already know we're at the top of those. Like anytime something breaks out like that, you don't always have to use Bollinger Bands, but if you have no idea where we're at, you might want to turn it on, right? But it's like just looking at this, I already know we're overextended, right? Because we broke out of this level right here. You all can see that I don't keep up with these as much as I should, but 340 seems to be this sort of line that we should, because a lot of times people try to like pinpoint like, oh, okay, it's 341.92. No, it's really not. It's just a psychological resistance around 340, right? Because even on a day like this, we opened at 340, or wait. We opened at 339, and that was also pretty much the low for the day, right? So it was as if people were trying to solidify this as their support. And even look at this day where we had already sort of gone on our trend, and on this day it retraced with this wick back to 340, right? So the low for the day was 340.15. So that's why I was saying it's so important for you all to pay attention to these types of things, especially the ends of these wicks, because they're telling us something special, right? On this day, it was a bad day, but it also did not close below there, okay? That's another thing. If we close below this, it's gone. Like over here, like the fact that there were prices pushing down here and this like stopped here, but then the next day it opened and closed down here, that was the death. Right. And then after that, everybody's like, okay, I'm gone. Right. Because if you close under here, that means that nobody even was even trying to be up here. Nobody was even like, I'm going to push this up here so we can at least have some strength. Right. So always pay attention to those wicks and also the bars as well, because the color is going to tell us something great as well. And if you turn on the, I went over this in my stories today, but the Heikin-Ashi kind of takes all of that like back and forth out for you. And if you're looking to, Max had asked, is it good for swing trading? Yes. If you're confident that this is your trend and you want to stick with it, then this will let you know that like, hey, you're good, right? So with the Heikin-Ashi, you want the wicks to be in your favor, okay? Anytime I'm on an uptrend and it starts to create wicks at the bottom, I need to be aware of that. Okay. So right here, that was the first warning sign. Okay. You are now creating prices below your trend. All right. So that's what happened right here. And it fell back to this. But notice where it fell to exactly the 50 EMA. Right. That's why it's so crucial for you all to chart the 50, the 100 and 200, because they do offer as a support. I mean, look at this. Look at it. It's been riding that line. Now, let's say the QQQ, now the market would have to crash for it to go to the 200. I mean, that's what happened in March, right? So anytime we reach levels like this, just know that it's like all gas, no brakes. Like we trying to get in on this. Next time this happens, if it ever happens again, we need to all be prepared for this financially, because this is where millionaires are made, okay? So let's pray for another March, because I would love that. Because I didn't start
without COVID.
Yeah, without COVID though. We ain't trying to kill people. We want the economy to tank just for like a month. I don't want nobody to die though. Like, let's not do the pandemic thing again. But it's actually interesting. Like, I'm glad I actually talked about that, because look, that wasn't the first. It actually does that quite a bit in March, right? So I want you all to know that I'm almost certain that this pandemic wasn't like something that was just like out of the blue. Like even the crash wasn't, right? This thing happens every March. It just does this. March, fail. That's December probably. Yeah, this is December. So September, y'all need to start, definitely start protecting. When September come, I'm going to tell you right now, you need to start protecting your, because what happens is from June till about August, we're really good, right? So where we at? See, we're in this right now. We're in this type of stuff, that June to August. And then once August comes around, that's where you start getting hiccups. And then September come around and do another little drop. And these are hitting 200 EMAs. That's not healthy, right? So I do want you all to be extremely conscious of that and these cycles. And this harps back on knowing when to trade, Like if you all look at the SPY and the QQQ and come in and chart them and say, I mean, because some of you all have not been trading for a year. Okay. So I've been trading for a year. And so I'm able to use my own portfolio's graph to let me know when these things come, because I'm gonna tell you, I got in the market about in May. So I was right here and I made money till about June. I caught this first little hiccup and I was good. I'm in Mexico at this point. I'm living the dream, y'all. I'm thinking I'm one of them old dudes that's got it set and I can retire because I'm holding Apple and Tesla when they split. And then I woke up in Mexico to a rude awakening. I lost about, I say about 2,000 in this little drop right here. And because I didn't know anything about stocks, I didn't know this stuff happened. I just was on this euphoric ride. And then you get here and you're like, I'm good, I can retire. It just keeps going. And then, so not only did my own portfolio show this, but you can come see it on, if you haven't been trading for a year, just come look at this, because we all trade in these stocks. So like if you were holding Apple, there's no chance that you lost money in this, or you were holding Tesla or anything in the QQQ, right? So if you want to look at what's in here, click on analysis, top 10 holdings, boom, it's right here for you. Okay. So it's so important for you all to keep up with the SPY, the QQQ, the TQQ. TQQ is the same thing as a QQQ, but you know, still is a great thing to watch. If you're into airlines, oil, industrials type, go do the Dow, right? I think it's just the Dow. Yeah, I think so. I don't trade the Dow, so I don't know what, I know the S Dow is the short. So I do know this is the inverse. So anytime I see this going down, I assume that things in the Dow are going to go up, right? So industrials, this basically what this is that infrastructure play. So I know Sana got on that. And that's what I was telling everybody, because I told you I create watch lists, right? And let me just show you all how that comes up for me. So when I'm coming through and making these watch lists, like they're by sectors or industries. So for my infrastructure one, I created this, and I had Caterpillar in here. And I found out about this company through watching Undercover Boss, but it was just another one where the son had overcome the company and basically like sent this thing on a rocket, right? I mean, this thing was nothing, and then the son became the CEO and it just took off, right? So I keep this on my radar because they do like a lot of infrastructure in Florida. But just back on what we were going over last week, was I was just saying that when you all, if you make these types of watch lists, you can watch entire sectors, right? So if I can come in here and say, percent change. So we'll look at it like this, but you can obviously, these took a hit just because they did just skyrocket, right? So always, and I've added some more things in here just based on the list that they put out for infrastructure. Here is a ETF for infrastructure. So you can always come and watch this as well to make sure your trades are in your favor. So in Sana's case, I mean, literally, I mean, textbook, right? I mean, if you're watching the industry as a whole, you can come in and just say, okay, I need to put money in infrastructure, right? We're testing the 100. I'm not saying do that now because like the move happened, right? That's not saying that we can't move towards this way. I don't play this kind of stuff though. But I do know one thing is that now that we've come up out of this 100 and moved back to the 50 and closed over it, right? I do have the confidence that this is going to be supported from here. So I definitely invested in infrastructure, but that is not advice at all. I don't trade infrastructure. I just happen to watch it. And I just knew that because this was low, that was just going to be something that had to bounce back. So in speaking on that, you always kind of want to keep up with some ETFs, right? I've got some solar ETFs. I've got ARKK because a lot of people trade these. Gold helps me kind of keep up with the market. as well, because how they react to gold, it's like if the market's doing bad, obviously gold is going to increase in value, just simply based on people are trying to go put their money in something that's a little more concrete, you know. But I watch a lot of different ETFs, but most of my ETFs are going to be in my indexes. So my indexes really gauge whether what I want to trade and what I do or don't want to trade, right? I'm always looking at this to see what fell. Okay, so if the S&P 500 bear ETF is down here, that means that the S&P is going up, right? If all these shorts are down here, that means the S&P is going up, and I feel good about the day, right? So if I'm trading Tesla or if I'm trading Amazon, I'm feeling really confident in here, right? So that's why Tesla was able to take off. Now, let's look at something that's a little more in our lane. You know, the JETS ETF, the cannabis semiconductors is your Nvidia, AMD, Intel, chip companies, basically. But yeah, these are some ETFs that I keep up with to gauge where I should be trading, because I don't like the green. Okay, if it's in green, that means that it's already left me and I'm not interested, right? I'm not trying to hop onto a trend. I want to catch it when it's down. So I'm always coming down here to see where that opportunity is. And so let's take a look, just for example, the JETS ETF, right? So the JETS ETF, looks like it might be heading towards this 100 because it just broke its 100 EMA, and it could be heading towards this 200. Excuse me, I think that's at 100. But yeah, this is the 200 EMA. So this is like a long-term resistance. It's like if you come here, you either have to come back or you just collapse. But in most cases on an ETF that's watching a market, you know, you really want to, you don't want to try to jump this gun here. So you don't want to play this too early, because if we're consistently making closes down here, then that's a little scary. But here's the beautiful thing about this is look how short that wick is. So we had a low of 25.02 and a close of 25.05. So only read, like I said, that's usually a good sign if you can kind of stop this from creating longer wicks, because you can see right here, you might have been like, oh, we can play this bounce off the 100. But this right here was the sure sign that, no, we're not done trying to bring this price down here, right? You were able to close back right here, but at the same time, I still want to bring the price down, which drove it down. And this is just off of candles and EMA. Notice that I have not used any other indicators, right? Because this is big picture, right? And once you can see this type of opportunity, right? Now we look at it and we say, okay, we know that there's support at the 100, right? It's come here before, it's done it twice. Now it came here on the third time and it broke through it, okay? So me being who I am, I'm just going to wait on this. I'm just going to assume that airlines are going to take another hit, because right now it's almost like the selling the news, right? Like American Airlines has so many flights that they had to start canceling flights because they didn't have enough pilots or something, right? So when you look at something like this, just always be wary that there is space to fall. Now, turning on these additional indicators, like your subchart indicators, like your MACD and your RSI. We definitely want the stochastics, but I'm going to use the fast one. So yeah, even the fast one is saying, yeah, we got some momentum to pull you down even further. Now, when you all are using these indicators, make sure you are looking historically of how low we can go, right? Like if I know that this RSI can go that low, I don't need to be trying to jump the gun right here, right? Because it's saying that we can go this low. Now, this was in March, so I can't assume that type of disaster. But historically, let's say that looks about, 36 is where it kind of bounces back from on the RSI, but it's gotten as low as 34 before, which it did here. It also did here, and now it's heading back towards this way. So, and the MACD just opened up and this didn't get any lighter, right? So this isn't looking healthy. But if you want to dissect it even more, right now, we know that the industry for jets is down. Well, let's look at what's in the ETF, right? So top 10 holdings, we can come in here and say, okay, Southwest Airlines in here. Let's take a look at Southwest Airlines and see what's going on. All right, so look at Southwest Airlines doing the same thing. Why? Because it's in that ETF. It controls that. So having those ETFs allows me to watch the whole market, right? I don't have to just watch Southwest. I can watch American Airlines all in the same ETF, right? So now American Airlines has obviously bounced off of its 100 and it's starting to kind of consolidate on its 50 and trying to use this as support. But what we know from, oh, this is not even American Airlines. Oh, I was about to say, okay, cool. So yeah, it's kind of doing the same thing, going to be heading towards its 100. Because I was about to say, how is reclaiming and the rest of the market is. But this is looking like it's going to be heading to its 100 as well. And then if you look at these indicators, notice this blue is starting to head back towards that signal line. So yeah, that's not good. But let's say you're looking at this on big picture, right, on this day interval. You can always dissect it down hourly and see, okay, what's going down on a shorter time frame. And you can see that that momentum is still, we still have room to fall, right? So I'm not confident that this can hold its weight where it is. And you can see that when you look on shorter intervals, those EMAs become your resistance, right? I'm just going to show you all Bitcoin, for example. It's having a nice little breakout, trying to reclaim itself over here. But the issue is that it's still maxed out. You know what I'm saying? It's still the fact that it failed that low and it didn't like keep these lows so that we could have room to go up. This shows me that, yeah, it's maxed out on RSI number one. So it's going to turn around. Now it has on the day chart though, it's got some room to run, right? I mean, and you got room to run at least till here before you get rejected, right? So yeah, in terms of what happened to crypto, it was this, right? You got your long or short-term EMAs crossing over your longer term EMAs. So the 50 crossed the 100. Number one, first, it closed under the 50. Right. So this was the first sign that it was going to have to go. And then once it closed on the 100, you go to the 200. Once you close under the 200, now these just start to follow. Right. Because if you can't get back over this, these are just like, well, cool, I'll just join you down there. Right. So once that 50 crossed the 100, it lost even more steam. And then once this happened, I feel like at this point, people just kind of like lost hope. I'm honestly just not interested in buying this particular dip until it really gives me confidence that it is actually back out of this range. Because if you really break this down on a smaller scale, let's look at 4 hours first. You can see that these lines are starting to be its resistance, right? So now we're here. If Bitcoin can't break over 34.7, it ain't going anywhere. This is just going to be another reversal. Right? Because MACD, I mean, RSI is about to be maxed out. And this is the most important, the stochastics, right? Because this is telling me that like, if these are the highs, right? So if I'm looking historically at these highs, boom, 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 and I keep a little line there, notice where that line meets over here. I'm about to hit that. And this is my momentum. So the blue line is going to be the leading line. This is going to literally tell me my direction. Right? So it's the momentum. So it's saying, hey, you got momentum. And then once this is maxed out, you can't go any further. Right? So it immediately turns around and it brings the price with it. So the orange line is going to be the price. The blue is going to be your momentum. Right? So if this blue line crosses under your orange, that is bearish. If it crosses over, you're bullish. Right? So right now we're bullish, but the fact that within this little jump, it completely maxed itself out. Right? You would rather these be a little steadier, giving more strength and room to move up. But if you're already maxing yourself out, you literally just have to return. So these types of indicators are really helpful on helping you all. And then once you see the lows, right, chart them, right? If we know that it's got support at 30,000, chart it, right? Because these prices that it stopped at, these are recent, right? But look at why from the past, because we've been here before. We hit it here, we hit it here, we hit it here. I think it went past it probably just a few days ago. Yeah. So at this point, this was probably like, at least I bought here. I'm not even gonna lie, I bought some here, but then I sold as soon as we hit this line, because I don't know, it just didn't look healthy to me. And so when you're looking at any assets, right, you want to first start big picture and then break it down, right? Because it can look ready on a day chart, right? I mean, you wouldn't probably be in the worst situation if you were to buy in a situation like down here and then hope to get here, because it's feasible, right? But we do know that as soon as we get there, we'll get rejected. So, and in order for us to really see, is this feasible, we have to break it down to smaller scales and see how are we reacting on these smaller scales. So on an hour, we've broken over that and we're starting to reclaim. But at the same time, we're maxed out up here, right? We're maxed out right here. But on MACD, we got room to run, right? Which is great. But if these are maxed out, this is maxed out. I mean, how high can these go, right? On stochastics, we've only got so high we can go. On RSI, we got some room, but at the same time, it's still one of those situations where it's going to follow this. So if this is already making its turn back, then this has to retrace. And right now, we just broke over 37 or 34,700. So we're either going to receive a really strong push after this or rejection from here, just based on the 4 hour, because that is the 100 EMA for the 4 hour. So you can see that even though it's trying to break it, it keeps getting pushed back down from these levels. So just running off of those, want to just stop for a second and make sure everybody's following along, you're understanding. And it makes sense. Would love some questions if you have some, or if you have any stocks you want to look at, we can kind of do that as well. Anybody got any questions so far, or stocks you want to look at?
Yes, I have a Nike. I bought a put on Friday, and I'm not sure if I did the right thing.
Okay. All right, let's take a look at Nike. Nike had a really nice breakout after earnings. That's another thing. I'm not sure why it's not showing the earnings right here, because Nike had earnings. But let's look at what happens after earnings for Nike historically. Look at that. Historically, after earnings, it just does these types of things. So look at this, another gap, right? So yeah, if you look historically, Nike would have just been a nice earnings play. I'm gonna have to look at that next time, earnings. And you can set an alert for the earnings too. So like what you can do is it'll connect to your, I don't know if it does for everything, but for my iPhone, it'll send me the alerts through the iPhone. Why is this not loading? Let's see. I'm not sure why the alert settings are not loading, but if you go in the alert settings and click on smart, if you're on your mobile, just scroll down and it'll be towards the bottom. You'll see like MA alerts, or like I think it's like price strategy alerts or calendar alerts. And under calendar alerts, you can say alert me when earnings is coming. So you can notice that these types of moves come after earnings, right? We got earnings right here, bop, you know. We had earnings. What did it do at this earnings? Now, where was this earnings? This earnings just came at a bad time. I told y'all March is just not good. March of this year did the same thing. We had no pandemic, right? So be conscious about how these, I feel like history is like so valuable. Like when I teach people about finding support and resistance, I always tell you to look left, period. Look left. Okay. Because what these things do historically, other traders are looking at that as well and having those same expectations. So March is just seasonally not a good time, mainly because it's the end of a quarter. So it's the first quarter of the year. There's a lot of optimism coming into the year, especially coming after the holidays, right? All that optimism and high riding off of the holidays. And as soon as January hits, we start to really get into the reality of the quarter, right? So you get a lot of up and down, and then we're running up with expectations, and then you crash with March, right? So as soon as earnings come around for a lot of people, it's like the buildup. It's like we're hoping you do good, and it doesn't matter if you do good or not. The earnings can really go either way. But historically, if you come and look in, you can see what it does when it's not a bad month like March. March is just death. September too. Like September is just be careful. But in the case of this, all right, first I'm gonna use my hefty defty cheat code. Let's check it out. Wow, yeah, cheat code is saying you good to go ahead and buy that put. I mean, I know you can buy that put because honestly, Nike usually trades around 130. All right, let's take off extended hours. Let's see, yeah. Turn on extended and see what it does. See, yeah, those extended hours, man. Throw in those weird prices. Let's see, 4 hours. I usually try to use cheat code on larger time frames because if you use it on shorter ones, it throws you a lot of buy and sell because that's what's happening, like a lot of up and down. And not so much with Nike. So you can see it's just like dots at this point, right? Because Nike stock, just like I said, it trades in this 130 range, so it doesn't move. So if you use cheat code on shorter time frames, even if you were to do this in, you just get these like dots, right? Because Nike doesn't move that much as a stock. It really just kind of stays in that 130 range. That's honestly why I didn't even see this coming. I don't trade Nike. I used to invest in Nike. I was like, man, it just trades at 130, right? Like I went sideways with this thing for an entire year. Look at this. And I was like, bye, I'm done with you. And then I should have had an alert though, but still it was in 130. So I didn't expect this. I'm going to be honest. I did not expect this. Nike just trades in this 130 range and I'm good on that. But then boom, earnings happen. You have this breakout. And so put, I think you're safe with a put in there, honestly, because let's take a look at the Bollinger Bands. You're at the high of that for sure. MACD is completely overextended. Well, not so much on the day chart. So dang. Well, RSI is oversold. Stochastics oversold as well. Put is good here. I mean, obviously, because it's so far out of that Bollinger Bands. So a put is fine there because, like I said, it's got to come back at least to 138. So, or actually 146 is like your safe zone. Like if it hits 146, you need to just go ahead and like be happy with your profits. Just take it, right? Because right now we know that it's completely out of its range. It's like a shooting star over here that just has to, the gas has got to come out. And even when you look at the high and the close, they're not the exact same, but they're pretty close to each other, which means that one, we have a lot of strength up here, but you usually want to see these types of hammers at the bottom of a trend, not at the top. Okay. Because when you see it at the top, what that's saying is that there's some people that want to bring this down. And there's a lot of people that obviously want to hold it up here, but there's still room here to fall. So kind of doing bottom down or top down approach on this, really moving down the intervals as we go through this. So like I said, it trades in this 130 range, right? So if we're looking at it on the 4 hour, we're way out still. MACD overextended by all means. This is the highest 4 hours ever seen. Oh, no. We had another time right here back in March. And it completely, well, it didn't collapse, but it just went sideways after that, right? Back into its little range. And so it was this high as well in September. Wow, this was and then in March of this year. Okay, so like I said, you want to pay attention to the range of that 146, right? Because at some point, this has got to give some of that back. You can't just stay afloat up there and not retrace, right? Because these people have to prove this. I can guarantee you one thing, it's going to have to close this gap. And because Nike trades in this 130 range, is going to come back here. You can't just do this. You don't do that. That's not healthy as a price anyway. I mean, anybody holding this should even know that you're not going to last up here long. And so definitely be looking for a retracement at least to 146, but this is definitely possible. This gap has to be closed. Doesn't matter if it's 5 days or 5 months from now, but this price will come right back here to this 130 range, and then it can take off to wherever it wants to go. But you just can't wake up, be up here, and then stay up here. So as long as you bought this at the end of the day, I always recommend if you're going to swing trade something, wait until the end of the day, because the most of the volume is going to be at the end of the day. So let's put on extended hours so you can kind of see that. So beginning of the day, end of the day. Okay, so in between, nothing's really going on. People want to live, people have lives, they want to go do things. Let's turn on VWAP though. That's what's going to be your help come Monday morning and holding this. VWAP. So the VWAP is supporting this right now. So your best decision on when trying to think if you're going to hold that put, you want to make sure you have time on that, okay? Because if you got an expiration of this week, you want to make sure that there's some open interest in your favor.
About a 2 weeks contract.
Okay, you got 2 weeks on it. What expiration? July 16th?
Yes.
Okay. So let's take a look at it. What strike price did you buy?
It was right at the morning.
Oh my God. You good.
Okay.
What like it was right at the money when it jumped up to 154 and you bought a 155 or 152?
It was at the end of the day, I think 152.
Okay, cool. And also everybody knows the spreads on these. It's another one that has 250 or dang. It actually has $5 after that, just simply because I don't even think brokerages knew that they was going to reach this high. So what happens is that when a stock goes on a move, a lot of these things don't exist prior to this, right? So if you're looking at, let's actually make this bigger a little bit here. Let's type in Nike. All right, let's move down here. All right, so let's go back to, all right, that's why I was saying, if y'all ever create these types of screens, make sure that you leave some free space somewhere so you can scroll up and down, because if you do it over a chart, it just does the chart. So you have to like find these areas in the screen where you can scroll. So we'll look at July 16th. And we'll look at the 152.50. All right, so this is the type of moves that I would make. I would have gone for this one. It costs a little more money, but we know for sure Nike isn't going to stay up here. So this one gives you more confidence. This one we still have to work towards, right? Because it's a 152.50. So in order for us to really catch the momentum that we need, because essentially if Nike decided to hold 154 for the rest of the week, this loses money, this doesn't, right? But I can imagine that Nike's not going to hold this, because the whole market's kind of overextended right now. All your short ETFs are at the bottom, and all your like indexes are at all-time highs. So I definitely don't think that Nike can hold this heat up here. But the VWAP is certainly supporting it, which is kind of strange and really crazy. But the real determining factor is going to be how this works in the extended hours. So when this opens up in the morning, See how this reacts with your VWAP. Make sure that is on. Turn on your VWAP. It does not work on a day because it's volume weighted average price. So it's taking the current volume and using that to average a price in here. So if your stock is above this, you're in good. But the position that this is in, I can imagine that it's only going to be coming down towards the open. Because a lot of these people, if they didn't take profits today, they're probably going to be looking for it here, unless there's some news that I don't know about. Because I don't trade Nike, but I would definitely be confident in buying a put here if this continues to go higher and then starts to make its way. Like, I guess, like if it's coming into open, right, and then this yellow line starts to move over this and then pushes it down, I would feel comfortable right there. But as long as this is being supported, it could keep moving, right? I mean, maybe people that have been holding Nike for forever are just like, well, we're tired of this whole little 130 range and we want to create a new range, right? Because it's not like Nike hasn't done that. I mean, Nike used to trade at $70. And now it's created this range up here, right? So it used to have a max of 103 and then broke through that. So before or right after the pandemic, we hit this and then had a phenomenal year, which broke us into this range. And then we just been kind of going sideways for an entire year. And so now Nike is broken over this. So like I said, best case scenario, or worst case scenario, I feel like you could get to 146. Best case, you could really break back down into this range before it actually has the ability to go out of there. But what kind of lets me know that this does have a little bit of strength is this right here. This is a golden cross on the weekly. Okay. And even the weekly's got some room, you know, if the max is up here on Stochastics, it's a little maxed out, but the weekly saying that long term, this is good, right? Or you can fall lower, but long term, it is doing a golden cross, which is probably what drove people to be cool with just throwing money at this, because it did it right here as well. So this is what gave people the green right here. They were like, oh man, golden cross. And for those that don't know, the golden cross is when your MACD line crosses your signal line. So this blue line right here is going to be my signal line. And this orange line is going to be my MACD. So when this is crossing above the signal, that is a bullish signal, okay? When it crosses below it, that is a bearish, right? So, and the histogram in the middle kind of lets us know that strength of that, right? So if you're not really seeing what's going on with these lines, just look in the middle. All right, because we can see, oh, we're doing good, and then it faded, right? And that first fade from dark to light let us know that this was about to happen, right? And then this started getting thin, and then we saw red, right? And the red got thicker, 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 lighting up a little bit, but still going deeper, deeper, deeper. We need this line to be turning up for us to give us any sort of chance at this, right? So right here, we saw the line kind of making some indentions to move up. And then we saw that, okay, this trend is starting to change, right? I'm getting a light one. Oh, I got another light one. It's thinner. Okay, now we green. I'm gas. I'm gas. All gas, no brakes. Because everything was really working in their favor at this point. Not to mention, check out this volume. Right, 7 million is the average, and the volume for the day was 46 million. So these are all key factors that determine these types of moves in stocks, because most people, I'd say most people are technical traders, right? Like I don't even look at balance sheets. I'm just not interested. I feel like that's a whole nother course of education that I would have to take. And I'm just not interested. I've never been an accounting or finance or numbers type of guy. I just, like to come in and is the work done for me? Okay, cool. This is low. This is low. This is turning up. Okay, bye. Right. So I look for more things like that. But in this case, this is looking bullish 100%, but at the same time, we're maxed out. So definitely on a top situation, this is a long call but on a shorter time frame, you could catch a retracement in this. So yeah, I would be looking at that. Just really following this VWAP, because right now VWAP is saying we got room, right? And anytime this is giving that support, I don't try to fight it. Okay, I respect this very much. One thing I would recommend for you in trading this is going and looking at some of these ETFs that it's under. Like this one might be a good one. iShares consumer goods ETF, right? So it's going to be heavily weighted in Nike probably. Well, Nike is at least the top one, right? So Tesla had a breakout. Nike had a breakout. I don't know what's up with these Procter, Coca-Cola, and Pepsi, but depending on what happened with them, this ETF had a great day, right? So go look at what ETFs are available for you to look at for Nike, right? And find which one works best to find stocks that act the same. So for example, ARKK. I always use this example because it's just the easiest to go through. But if I want to trade Tesla, I need to follow ARKK, right? And if I'm going to follow ARKK and Tesla together, I can follow any of these really, or at least the most weighted ones. Because here's the thing about following other stocks in the same ETFs. You're going to have to look at, hold on, my phone's ringing. But for the ARKK, so Tesla's heavily weighted in this. You also want to look for something that's weighted as well, or you can look at something in the same industries. But just for example, we're going to look at these. So your ARKK, your Tesla, and let's look at Roku because it's in there too. It's in the ARKK. So we'll look at it on a day chart. It's on a day. And if you look at these, they all have the same type of trajectory, right? So it's important that you dissect this because it wasn't easy for me to find these types of things. And I don't think it's meant to be easy, but it takes a lot of research and a little bit of time. But I went through all of these ETFs trying to find out what stocks work together. And this is probably one of the ones that I found outside of like, you know, trading Baba with JD and stuff like that. Like there are combinations that I trade and I don't trade without that combination. Like I would never go trade Apple without looking at the QQQ. Right. So the same for you. I don't trade Nike, but find out what other retail brands or retail ETFs. And like I said, you can do it in a reverse, like you can do it in Webull and say Nike, go into analysis and ETF weighting, and they give you your options right here. And you can drop in these and see what else is in here and put them side to side. Right. So then you come back and say, okay, well, Nike's in here with this and there's other things, and just drop them in here until you can find some that look like they moving together, and then go ahead and make a watch list, right? So if I'm gonna trade Tesla, I want to watch all of ARKK. You know what I'm saying? And I came through, and it's usually not like this. It's actually in the order of their weight. Because obviously if Tesla is falling, then this ETF is going to fall, right? I can't just open up and say, Baba's having a great day. So, or Baidu's having a great day. So all of these are having a great day. It doesn't work like that. So I usually have them in the direction of their weighting. But after you found that mix, you need to go create a watch list for it. Because if you're going to trade Nike, you need to also create a like Nike watch list that has things that move like Nike, right? So that is so crucial because I don't trade without it. If I can't drop in and see things together, I don't want to trade it because I'm trading blind at that point. I don't have any sort of like, you know, leverage helping me. I don't have anything that's letting me know that, hey, the rest of these are doing good. So obviously they got to be doing good because something else is good, right? So definitely do some more research on finding what works with Nike. But also bar chart is going to tell you how people feel about Nike. So it's got a pretty middle of the way put call ratio. Once you click on the Nike as off of the put call ratio, go to put call ratios for Nike. And then you can see how people feel. So you have the 7/16, right? Expiration. So in your case, looks like puts are building up, right? And puts are building up right now. I mean, honestly, just looking at this, depending on how that VWAP looks, I might just buy a put, you know, in the money on Nike just to like catch these folks trying to sell, you know, because not a lot of people are holding calls, right? They're already trying to get rid of these things. They're like, all right, I made my money. I'm not trying to be greedy, right? And so more people are like, I'm holding, right? So this is important. Oh, this was for Friday. My bad, y'all. So we're looking at this one for this week. So still, it's a little neck and neck. It's going to be a battle. Somebody's got to lose, though. Somebody's going to have to lose. This is 1 for 1. This is what this says. The put call ratio at 1 means that we are even. We're neck and neck. And these people want more, and these people would like for this to fall. So pay attention to this. Tomorrow, what's going to happen is that when you open up Nike, it's going to reset these numbers for you. So when you come in tomorrow, you're going to know how many people are in your favor, right? So for the open interest of that day, there was nobody, okay? Nobody was holding your contract at the beginning of the day, mainly because it probably didn't exist. I would imagine none of these existed because none of them probably expected Nike to come this far. So none of these probably really existed, or this one in particular, I know for a fact didn't exist, right? Because you can see that it has $5. Well, after a certain point, it breaks to 5. So this is like the no man's land, and this brokerages, or like Webull in particular, created a 152.50 strike price. Reason as to why there is no open interest here. So pay attention to those types of things. They happen once things like once the volume picks up, and like brokerages are cool with taking on the volatility, they'll create new strike prices. So this is what happened. You bought a completely new strike price with no open interest and 3,000 volume. So most likely your open interest is going to be around 3,000 or maybe less. You know, all of these people could have came in and then ran, right? Like 3,000 contracts could have been bought, or 1,500 contracts could have been bought, and then those 1,500 could have been sold, right? And that's total volume of 3,000. Right. So what's going to tell you whether or not you're going to hold this or not is knowing what happens here. So if you have 3,000 open interests, you know that none of these people are scared. They were like, nah, we bought that day and we holding because we know we can't breathe up here. All right. So even here, 54 open interest, low open interest, and high volume. Right. So definitely pay attention to this, because if there's a lot of people still holding on this side, yeah, 152 was new because they didn't even have calls up here. But if your open interest is heavy on this side, that means you got a lot of people on your team. Right. But if this number does not transfer here, yeah, I'd be looking for an exit strategy, because this could get just extremely bullish and just rip. Right, just based on the weekly that we have seen on how that looked in the chart. And I told y'all, once y'all break over these types of things, things get a little crazy, right? Once you've broken out of this, a lot of people start to believe that they have support here, so they're not scared to buy here. So be careful on those types of trades. But first hour of the day, you're going to have the most volume. So if anything's going to happen, it's going to be here, right? So we noticed that the low of the day came in the first hour. And after that, it just had a great day. So if you're going to make some money, if you get right here and VWAP ain't above you and you right here, you need to go ahead and take your money, right? Because if VWAP looks like the same way this did and you get one of these, go ahead and sell your put here and just move on. Or if you got money to lose, and I mean, not money to lose, but if you got patience, wait it out, right? Like you got time, July 16th, you can wait it out and just wait for it to fall, because eventually it'll fall and you'll be in the money and you'll be good to go. But if this keeps climbing, then you're losing money while you're waiting. And then when you start making money, you're only getting back the money that you lost. So just be conscious of that. Always have a stop loss ready, you know, maybe like, and how you do that, you would have to go look at the chart and see what was the price of my option when Nike hit 154.90, right? Like how low did it drive my option price, right? And did I buy it as the closest my low? Because that's another thing. Like I want to be buying the closest to the low of these as possible. So considering the day that this had the low for the day, oh, they don't give you the low. Dang. Well, you can see the low on the app, but yeah, you can come in and say, all right, the low for the day was probably 260 or 250 because this option literally was like losing money as the day went on. So like this price was probably around the lowest you could have gotten it, you know, just depending on what it was. So if we know that it hit a high of the day at 4 o'clock Eastern, go look at what the price of your put contract was at that time, and that'll tell you the lowest price that it was, right? Because this is going to be the inverse. Your calls are going to make the most money right here. Your puts are going to be the cheapest right here, right? And your calls are going to be the cheapest here, and your puts are going to be the most expensive here. So you never want to buy, or excuse me, your puts are going to be the cheapest here, and your calls are going to be the cheapest here. So you never want to buy a call once you see it on a trend because you're most likely going to lose some money first, right? So anytime you're buying a call, you want to catch these lows. Anytime you're buying a put, you want to make sure that it's overextended and you're getting in a really great price before you like, because if I buy a put here, right? And let's say I buy a put here, this was my only chance to make money. And then after that, I'm just losing for the rest of the day. But if I bought the put here, then I made some money and then I'm like losing some of that profit, still kind of losing some of that profit. Now I'm back to break even at this point. And I could potentially, if I'm really feeling confident, I'll buy another contract because I already know how much money I can make by what you gave me a taste of today, right? So be conscious of that, the highs, the lows of the contracts as well. Yeah, hopefully that answers your question. Pay attention to VWAP, long story short. Going into that. Anybody else have any questions? Cool.
Got a question. Out of curiosity, can we chart MSCR because of Bitcoin? Because I was just looking at it right now, and it was down like 31%.
Yeah. Hold on 1 second. Let me send this to okay, MSTR. Cool. Yeah, let's look at that. Okay. So MSTR, the cool thing about this too is I watched cryptos. Okay. So I watch how these perform and how these perform, because based on how these are looking on the chart, I can already know what these are going to do, right? If these are being rejected, this ain't going nowhere, right? If these have room to run, this got room to run, and vice versa. If these got room to run, I'm looking healthy right here. So in the case of MicroStrategy, let's take a look at this. So volume average is 740. Volume for that day was 1 million. Number one off the bat, VWAP is pushing this joker down. I really should have came and bought a put right here. I don't really, these are way more expensive. You know, you really got to spend some money to be playing with this, you know, and I ain't really trying to put $3 grand on the line. But if you got the money, it would be perfect to buy that joker right there, because VWAP was like, nope. And then just send it down. And Bitcoin was falling, had the death cross on Bitcoin. Even looking at this big picture, it may do the same thing. Yeah, it had the same death cross, right? So yeah, this is going to follow each other now. In terms of what it's doing now, is being rejected just like Bitcoin, right? So now this is going to be different for what happens and how Bitcoin finishes the rest of its week. So if Bitcoin, you know, finishes today healthy and continues into the pre-market, then this could look healthy for reclaiming this 100 EMA. And then you notice this 50, not sure if you can see it, but this little thin blue 50 right here. Let me actually make it a little thicker so you can see it. So you can see my 50 is trying to come back over that 100, right? So we crossed it here, boom, sent it down. And then it started to turn back up, hoping for this. It reclaimed that and then lost it again, right? So at this point, you've closed under that again. So let's look at the, oh, I already got them on there. Cool. So yeah, this got room to fall, period. Yeah. This could fall some more, but only to about this point, right? Maybe it'll bounce off of 500 and just take off from there. But I would look at Bitcoin. USD. And then MicroStrategy. Right? I mean, like, if Bitcoin can't hold this and gets rejected, well, this is getting rejected as well, right? So let's type in maybe like Mara. See what that's doing. You know, so all of these are going to have the same trajectory. So if I'm gonna trade one of these, I'm trading this. Now, Bitcoin is going to have a lot more movement because it has extended hours. This is trading 24/7, but for the most part, this is going to react to it. So when Bitcoin did this, this reacted with a leap, right? And when Bitcoin had his run up, all of these did, right? Now, when Bitcoin started to retrace and it broke this, all of these woke up the next day and had to fall off, right? These gaps, right? So if you're going to trade MSRT, the best way to really look at it is following Bitcoin as well as other stocks. Because if Bitcoin, like I said, holds this, zoom out a little bit. If it holds this, then it could be a healthy return, right? But it has to hold that this little area right here. And if it can't break over this, I can't expect this to go anywhere, right? So yeah, long story short, just make sure you're watching Bitcoin with it, because based on this is just the day chart and it doesn't include all of the extensive hours as Bitcoin. So it's only being reactionary, right? So like when you open this up on Monday in pre-market, this could be a different story, right? It could be making its way back this way, but I'm gonna tell you one thing, it's gonna hit this line and get rejected, right? So this 560 type area, 560 to 565 is going to be somewhere where it's going to catch a lot of resistance. So if Bitcoin can continue to kind of push up, then you've got room. So what exactly are you looking at this for? You know, to go up or down? You know, what is your strategy in it?
As far as going up, because typically whenever I do like calls, at least what has worked for me is I always look at percentages that are down and compare it to the ATR and how much it moves. So typically I always look at the losers and then I try to chart those to see where it's gonna go up. And then if I know where it's gonna go up, I know where it's gonna bounce. And then from there, looking at volume and all those other things, I decide if I want to go into the trade or not. So
I see you. Yeah, because it's at the bottom of my watch list as well. Now, 550, I know somebody personally that had the 550 put, and obviously they're going to be taking money on this one. So let's look at, well, it's not a highly traded stock, so you're not going to find it on bar chart in terms of on the most active list, but you can type it in and then click on the options right here. Right. Oh, it just straight up went to it for me. So let's see, kind of neck and neck. People are a little indifferent. You know, it's one for one on just about every week, you know, and me, honestly, just to be honest with you, looking back at MSTR, on the day chart, I'm not comfortable with that, you know, because I would assume that it's going to go ahead and just give me one of these. Because before I can really get bullish on this, I would like to see it close over this, right? Yeah, outside of that, this is, but like I said, it has to catch up with the data from Bitcoin. So once the market opens, if Bitcoin, if it can hold 35,000 by 3 a.m. this morning, then you can expect for this to have a nice pre-market, right? But here's the thing. If Bitcoin is also running up to 35 at that time, then most likely it's going to reverse from that. So I always tell people, be careful about these good openings. These good pre-markets usually don't finish good, right? So like here we had a great pre-market. You like, and this is the same situation we're in right now, right? We're at 540, 550 range. Bitcoin had a good weekend, so you wake up and it's up, and then you're like, oh, I'm doing good, and then because all this does is give people with the ability or urge to buy puts, it gives them more confidence. All right. But hold on one second. I got a call coming in. Sorry about that. Okay, so yeah, when you're coming in to a strong pre-market, oh, if you're already like and you're pushing towards my resistance right here, oh, I'm ready to buy a put, right? Even looking at how it did in this pre-market, well, it kind of slumped and then got a little jump and then started going sideways. But anytime you're having a healthy pre-market, you can always assume that the rest of the day is not going to be so healthy. So tomorrow morning, we're going to be looking for MSTR to recover because Bitcoin is trying to do that. And what's going to happen is it's going to do the same thing it did over here, where it's like, yeah, we're here. Bitcoin had a great weekend. We start here in the morning. So if you happen to buy MSTR at the end of the trading day, like at 7, right, then it's going to be a good 3 a.m. for you, right? But if you got a call, that contract probably has to be immediately sold at the open when it tries to push for these highs. Because like I said, in the morning, you do get like the up before it goes down, because what's happening is people are trying to drive the price up because they're like, oh, we're doing good. And this was me. I was the dumb in May doing stuff like this. Like, oh, we having a good morning, man. I can't wait for the market to open so I can buy this. And then it was like buying, and then you feeling good. And then it's like, for the rest of the day. So that's why I say pay attention to VWAP, because that's going to let you know whether this is in your favor or not. But as a VWAP at the end of that day, obviously it had been pushed down. But the only way we're going to know what's going to happen from here is if we go back and look at Bitcoin. And if Bitcoin can hold its 35,000, then we can see MicroStrategy to open up strong. And then these indicators aren't bad right now, right? Stochastic is kind of in our favor, RSI as well as in our favor. This is a short time frame though. This is 1 hour. So on a day, yeah, we got room to fall on a day. So on a short-term scale, yes, you could run a call, but as soon as you making some money up here, you might want to go ahead and make sure you're not in the midst of this, right? Because there is some room to fall. And I honestly still feel like it's going to fall. But that's just my opinion. It's not fact. It's not concrete. I'm just a guy out here reading charts. But I'm going to tell you right now, I don't feel comfortable in positions like this. I like this, right? I don't like this, because that just lets me know that we have this type of room as well as this type of room, right? And we can see that the trend is fading. So whatever strength it was getting is gone now, right? Because this orange line is about to cross our signal. And that's going to be a death cross for MSTR on the daily, right? So yeah, that's just not a good look. I don't think crypto is looking good at all. I mean, it does not say that future isn't great, right? Because we all have ups and downs, right? Before we hit this high, we had some lows. So you get a little bit of the stutter stepping, and then once you break out of that, you can break up, right? But yeah, I would be very cautious in trading this because there's space both ways. And in terms of Bollinger, you're probably right in the middle. Yeah. Look, y'all, I'm telling y'all, I don't even need some of this stuff on the screen to know where it is, right? I already know that Bollinger is creating highs for me and lows that I historically see on the chart, right? But if you don't see it and you need it, turn on Bollinger Bands. But I already knew this was in the middle just based on the fact that we're in the middle of a range, right? It's come from the low to the high, and now we're like in between. So I'm not sure if this is going to keep going down or it can keep going up. I'm just sure that I don't want to be messing with this. But this is a good sign. The 20 MA is being the 20 MA. I remember you asked a question about this in the beginning about the MAs. Your Bollinger Band has your 20 in the middle. Okay, so this is a good sign that your 20 has now bounced off of your 200 and is starting to recover. And this is holding that 20, right? Because the 20 is going to support your trend. The 20 is letting you know that your trend is still current. So right now, this is a healthy trend, but that doesn't mean that it can't cross over this line, right? And as soon as it does, it's not going to stop. So as soon as we get a close under 540, you need to get out of any call you got because we going back to 4 something, right? I mean, even if it's just 491, that's a lot of money in a call to be losing right here. That's $37, right? And that's a lot of money in premiums for contracts in losses. So definitely be cautious about your MSTR. But this is a good sign, but I don't like all this room. So if you're going to make a call trade, make sure that you're buying it at the lowest chance and opportunity that you can, because hourly you're looking healthy. Like I said, you can get a good retracement off of the hourly. But whether you can hold that past, 580 or even heading towards anywhere close to 600, I would be I would be very cautious about that. So just if you're going to enter a trade here, just know that you need to also keep up with Bitcoin to make sure that it is working in your favor. Because if your indicators for Bitcoin are not necessarily in your favor, then you can't expect like Bitcoin is maxed out and it's got to come down. I mean, we already away from 35. I told y'all that 35.7 was not going to hold. But that's just, you got to keep up with this. And I already assumed that we coming back here. So if we come back here, MSTR is just going to be not having a good morning. But if Bitcoin can hold this range up here, MSTR could at least have a good morning, but if a good pre-market is usually not a good sign for a continuous good day. So be very cautious about this because like I said, I don't ever want to be entering trades when things are at their highs or maxed out or even has room to fall, right? So be cautious about that trade. Hopefully that helps. You got any questions just based on what we kind of looked at?
No,
Did
thanks.
that help?
Yeah, I did.
Okay, perfect. Yeah, because even look at this, right? It's kind of the inverse of your MSTR. Like Bitcoin is trying to make highs. It's trying to break over its 20 MA, but it can't. And right now, MSTR has fallen back to its 20. So if Bitcoin gets rejected, then MSTR is going to go ahead and follow and just break on over that 20 and go ahead and go the same direction. So the only way that MSTR can officially have a great day is if we can get Bitcoin to break over this 20 right here. Because right now, going under the 20 is like the death. I mean, like we dropped under the 20 and you start retesting lower EMAs, right? We tested the 100 here, couldn't hold it. Went to the 200, couldn't hold it. So once you break the 200, now you have to start looking at history, right? And so historically, we had a lot of support here. right? So once we broke over this area, we noticed that we had some support here. So I drew that line. So when it started falling, I knew where it was going. I had to guess. Look where it stopped, like stopped on the dime, right? So that's why I always say, look left, look left, look left. It's so crucial. So when you start breaking these types of long-term moving averages, you got to look left because that's all you got. And even before all the indicators, you still need to just be looking at price, right? Because just looking at the price, I can see where we were going to stop over here, right? Just based on this, because the last time we had some highs, we came back and this was our new lows, right? And then once we catapulted from there, it was just only a matter of time before we came back to that. So always be conscious of this. And even looking at where these lines are here. So once Bitcoin starts to get on this little run and it's up at 40,000, we'll know that once it breaks over 40,000, it's going to go on a straight run to 46. Easy. Like 47 is going to be its next resistance. And yeah, if it breaks over 40, it's going straight to 47. Like all gas, no brakes type move. Like, I mean, look at what it did here. You know, so yeah, once they get that confidence, we made it back to 40, it's all gas. And then that's when you start seeing these parabolic moves. But until we can really break over that, we can't, right? Because we are creating newer lows. Like our lows are getting lower and our highs aren't getting any higher, right? So this was the most recent high where like everybody was like, it's back. I was like, are you serious? Because if it was back, it would have to beat this, right? This is still a downtrend, right? My new highs are even lower, right? So don't believe the hype, okay? Because I knew for a fact I needed to sell right there, because if this is all you got, this is where we need to be. And if you can't even make it here or even right here, right? Like I mean, I'm trying to give you a little bit of space at 38 and you can't even make it there. You got rejected at 35, right? So first things first, if we can't make it over here, we're certainly not going to make it here. And if we can't make it even here, we ain't going here, okay? Without first resetting these indicators. And right now on the day chart, it does look good. Actually looks healthy on the day. But based on the EMAs, this is what tells me that I've got some resistance up here. So if I can make it back to this 40, no, it's going to reclaim this and it's gone. All right, but we first got to get there. And on lower time frames, if it holds this 33 right here, we in some good news. We're in some good news. But I usually don't try to trade off these shorter time frames. But you're most likely going to see it hold 33, and we'll see what happens from there. But right now on a 4-hour, we know that this 34 is a resistance, or it's 35 really. Let's just say 35, keep it healthy. But yeah, so keep an eye on this. Always go top down. You can go bottom up, but if you're going bottom up, just know that you're trading short term, right? You're just trading things like this. And that's cool and all, but like you're a short-term trader, right? I only use these smaller intervals to make sure that my timing is right. Like this gives me big picture, like today we're ready, right? Now 1 hour, where should I be ready? 5 minutes is the time now, right? Because I certainly don't want to come in and, you know, on the 5-minute interval, we like maxed out because I already know, okay, well, I'm going to lose 2% or something in this. So I want to make sure that I wait on these things to kind of cool off and chill out on these shorter intervals so I can get like the perfect entry. But that's the only time when you want to use smaller time intervals if you're really like crunching the numbers. But big picture, this is where you make the ultimate decision of whether or not today is your day. Because on a day like this, you can say, oh, well, dang, I'm comfy here, right? We just tested this quite a few times. If we're here again, I'm comfortable here. But once we've kind of moved this direction, I want to see, all right, can you break through to this? And based on that 4-hour, we got resistance to cover. So the first goal, and the way to keep up with this, instead of having to watch it, right click right there. I want to set an alert. Let me know when the price is above 34,772. And I'll leave a note in here so I know what this is alerted about. A lot of people will create these alerts and not leave themselves a note, because what good does it do if it says, hey, the price for Bitcoin is above 34,000, and you're like, what does that even mean? Well, right here, I want to say bullish. Okay, just a simple note to tell me that this is bullish for Bitcoin. So anytime Bitcoin wants to run that way, I know that it's bullish, and I can go look at it and keep an eye on it. Why didn't it save it? All right, we're gonna click out of that. And I'm gonna go back to Nike and show you the earnings one, since it's working now. It's not working. Dang. Let me go to another one and see if it'll work. No, it's not. That's tripping. But in here, alert settings, you can set alerts for earnings as well. But when you all are looking at these things, like for Apple, take instance, like, if Apple falls below 132, right, I can set an alert here and say, hey, let me know when Apple falls below this price, because you'll be back in some range that I'm comfortable with or something, right? Make sure you all are utilizing these alerts. They're so crucial. Next week, I'll really chop down alerts and break them down. Hopefully my alert settings is working by then. And we can really kind of, I'll show you how to use the alerts to trade for you almost. They're not going to activate and execute a trade for you, but it'll at least tell you, hey, you weren't thinking about trading today, but might be an opportunity right here, right? So I'm going to show you all how to do that next week. And we'll really dive into alerts and really maximizing like our entries for options and whatever else y'all want to go over. Like if there's anything y'all want to talk about, always shoot me a message, drop me a line and say, hey, can we go over this week? And I'll put it on the calendar. So really want to make sure that you all are learning and you're really gaining knowledge out of this and actually becoming better. And if you're not, please let me know, because there are things that we need to focus on for you. And make sure that you're getting and understanding that information so you can make some money. Because I like this week, it was like, yo, like if I'm winning, somebody's got to be winning. Like if you followed any of the trades that I just even remotely just looked over, like Baba jumped. I mean, I was even thinking like, I mean, if Baba hits 220, it's possible. But I was like, if it does, this is the type of money that's made. And Baba hit like 224, right? So, I'm never trying to talk about things that aren't valuable, right? I don't ever want to throw out examples that aren't worth looking at. And I want to make sure that I'm covering every strategy and steps that I take so you all understand how to find and execute trades. So, and utilize all the tools that are available like Bar Chart, FinViz, Webull, TradingView, just everything you can. Oh, high shorts. Not going to go in too much in detail about this. We'll cover this next week. But high shorts is how people are finding these GameStop type things. High shorts interest. Basically, it's just the most shorted stocks, right? So like before AMC and GameStop were taken off, this is where you can find them. They were at the top of these lists. So now you can see a lot of volume that's coming in for this. I keep getting alerts about this. Workhorse obviously is completely oversold, thing tanked. But if you're interested in doing those types of trade, I don't play games like that. But if you're interested in it, this is where you would find them. But you got to make sure that the momentum is in your favor, because they're heavily shorted, which means there are a lot more money working against you than in your favor. Okay, so 40% of the people here are shorting this, which means that 40% of those people also could send this to become a rocket, right? Because they probably would let go of their short positions. Or what happens is what's called a short squeeze, where they have to cover their position. Because when you're shorting a stock, basically what you're doing is you're selling fake shares. Okay, you don't own any of these shares, but you're selling it as if you did. And so you're assuming a profit. So anybody that short sells a stock is actually taking on a debt. And if that stock begins to go up, your debt grows even bigger, right? Because you don't own the shares yet, right? Now, if the stock goes down, you gain money because the stock is working against your debt. So your debt is getting smaller. And then when you can buy the shares, you basically you take your profits that way, because you're saying I sold them up here even though I didn't have them, but then I'm buying real shares to cover down here. Now, if the stock actually ends up going up, then you're in a situation where your fake shares actually are increasing in value, which is increasing in the debt that you owe for the fake shares that you still have to buy. Because when you short a position, you're assuming the ownership of something that isn't there yet. And so I remember Elon kind of broke this down over a call on Clubhouse, where he was just kind of saying that like it started way back in the day when like there wasn't a digital market. So what people had to do was send these letters out, and they would be like, hey, I'm selling these shares, and they would send this note out to short it. And basically, long story short, it's like the market was moving so slow that was how they had to do it. It was like you could sell shares before you had them, just because it was like it moved slow. You know, I mean, it was like sending a letter in the mail, right? But now, since it's a digital world, you can short these shares and sell them as if you have them, but you don't. But if it goes up, you then have to assume the positions, or you have to take on the positions and assume the profit or loss in this case. So what happens is that these people end up having to spend more money to buy into the shares that they tried to sell. And that's how these short folks make money. So anybody that's looking to get a short squeeze or a gamma squeeze or anything like that, this is where those come from. I don't trade them, like I said, because you could be waiting. And while you're waiting, you're losing money in options. If you want to buy shares, it's probably a little safer, but that still doesn't negate the fact that a lot of people are spending a lot of money to bet against you, right? So yeah, that's it on the high shorts. I just thought it was cool when I found it, but I don't use it. I don't trade like that. I trade off of technicals. I don't trade off of like trying to catch a rocket. Like, this just seems like a lottery, but it pays off. So if you like that kind of stuff, you got money to kind of just like plant, then that kind of stuff is beneficial. But yeah, that's it for today. But next week, like I said, I want to go over stop the share. How do I turn off the recording? Let's see. Stop recording.